Hello traders, hello everyone, my name is Gregor Horvat and welcome to our new update surfing the Elliott waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will look at the S&P 500, Euro, Cable, Kiwi, Crude Oil and Dollar NOK. Now, before we go to some of the wave counts on the markets that I just mentioned, well, I want to look at these intermarket analyses. So at the top we have the S&P 500, which, as you can see here, from mid of March it's up almost 4.5%. Well, here at the bottom we have some of the currencies versus the US dollar. In particular, we have Cable, Euro, which are on the top trading versus US dollar, and then you have Aussie and Kiwi trading much lower. So it appears that commodity currencies are much weaker in this risk on environment, since the stocks are trading to the upside. So this is quite important, at least for me, because in this risk on environment it suggests that whenever stocks are going to see more upside, pound and euro could do much better in this risk on trade rather than Aussie or Kiwi. However, historically, Aussie and Kiwi usually are very strong currencies when there are stocks in uptrend. But if the commodity currencies are looking weak, well, maybe that's some kind of a contrarian signals that maybe the stocks are not trading so far away from potential resistance. However, there is still an uptrend for now, so we definitely have to respect what is happening. Stocks are trading to the upside, so whenever we are looking for potential opportunities, we should be aware of more upside and maybe focus more on this euro and pound rather than Aussie and Kiwi at this stage. But whenever we see a strong reversal here on stocks, that's when commodity currencies versus the US dollar could be very attractive even for potential shorts. Now, if we look at the S&P 500 first, well, I'm still observing this potential higher degree triangle within uptrend, so more upside could be seen after this wave E. VIX is also trading here at this low, so looks like that market is confident. There is a lot of fear here, and usually, as you know, this can be contrarian indicator, similar like had been shown here, even here, and even few times back in 2022. So I'm aware of potential triangle here that wave E is still missing. However, looking at some of the intraday structures and charts, well, notice that we can either be finishing this free wave recovery for wave C that is part of this big triangle, okay, shown here. So this free wave structure into wave D can come to an end, as shown here with this subwaves, or maybe there is another push higher coming here into the wave, into wave 5 of C or 3. So for now, I still think that it's a little bit tough situation here, because the price action itself is sideways, okay, but I think that sooner or later we will see some kind of a pullback down into either into wave E, maybe even into wave 4. So I just believe that there is very important resistance not far away. Okay, we got these US CPI figures yesterday when we have seen this spike to the upside. So either we already are seeing a top formation here, or maybe one more push higher is coming, and then we see a bearish reversal. But for now, as I said, stocks are still in uptrend because we are definitely trading and holding this channel support line. So in this situation, we should, as I said earlier, should be focused more on the euro and pound rather than Kiwi or Aussie. So if we look at the euro, so far we can see a very nice push to the upside, which in my opinion could be headed to a new highs of 2023. But keep in mind that I'm tracking wave C that moved out of this wave B consolidation this week, so there can be limited upside. We are looking for 1.1040 to 1.11 to be as a potential resistance here for this wave C. Okay, so don't be surprised if we see some kind of a reversal later this month. Also, if this trend line would be broken here, okay, I connected it from March lows, then obviously this would be indication that something is changing. Also notice that that was the same low when the S&P 500 also turned to the upside. Okay, it was in the similar time zone. So in my from my perspective, if stocks would suddenly, let's say, turn back into the risk off, then euro dollar will also see limited upside here. Now also looking at cable, we are seeing a very nice move to the upside. We think that there is a fifth wave, so definitely you have to be careful whenever we are trading in a fifth wave already at the new highs, because we know that then higher degree recovery can very soon slow down. However, looking at the FIPS and previous swing high that can act as a resistance, I think that there is 1.265 very important level. Above that you have wave 5 equality compared to the wave 1 here around 1.3. so clearly there is still room for some more upside, which in fact may not be a surprise, because if you look at these intraday substructures, clearly that was an overlapping decline. Okay, so I was looking this to be a counter trend movement, confirmed by this very nice intraday bullish reaction that broke this trend line. So I think that there is a nice ongoing recovery right now, which could bring us even higher on this pair until we see a completed 5 waves up. Notice that we are now only in wave 3, so more upside could be seen after the next dip. I'm looking for more gains in this recovery to stay in play as long as we are trading above 124.57. This level is broken, then I think that we will have something more complex going on and challenging, maybe even to the bearish side. Now let's take a look on the Kiwi. So as I said earlier, if we are going to see some risk of flows and maybe suddenly we break this trend line by the end of the week, then forget about the euro and pound for the moment, because as I said, these one are the strongest in risk on trade. But if we see the risk of flows, then Kiwi should be very interesting. Looking at this 4-hour chart, notice that there is very nice sell-off with some overlaps here, not the perfect bearish price action, not the strong one, but still it can be counted as a 5 waves leading diagonal for a wave A. So afterwards we have seen only a 3-wave rise, and that drop that occurred last week, despite Bank of New Zealand hiking the rates by 50%, looks like the speculators are more focused on what bank may do on the next meetings. And I think that because they do the surprise now, I think that there is less chance for a new surprise in the upcoming meetings, or maybe even new hikes. So in my opinion, this could potentially mean the speculators are positioned for some dovish reactions, or at least to be bank on hold. And of course this could be the reason why it's time to go out of Kiwi. So it's not a surprise to see Kiwi weakening. We can see a very nice break below this trendline support, and I would be looking for more weakness here. And as I said, maybe stocks, yes, could see maybe the S&P 500 another high up towards 4,200 level, but that doesn't mean that Kiwi will do the same. We could see here the lower high, while the S&P 500 can make the higher high. So if suddenly we see, as I said, risk of flows, then focus on these commodity currencies such as Aussie and Kiwi, which could see more weakness here. Also looking at the crude oil is trading very nicely here based on Elliott wave terms as well. We've been looking for this reversal from a 5th wave. We so far are trading far away from after this breakaway gap. So this gap caused a price to rise above the trendline resistance. So clearly we are in the recovery mode, and I believe that this will resume after the next setback. Now the question is when this next pullback will show up. Well, so far we can count 5 subwaves up within this extended wave 3, and we are seeing prices moving into this resistance here around $83 per barrel. Keep in mind that there is almost 25% recovery so far, if not more. So I will be looking for more upside after the wave 4. Now the ideal support for a wave 4 will certainly be at this gap area. Normally when this gap occurs, can stay open for a longer period of time if it's not covered in 24 hours. So in my opinion, on the next wave 4, this would be the ideal for this correction to fill the gap where later on could be a very nice support for a new continuation higher into the wave A. Okay, so crude oil still in uptrend, and when the crude oil is in uptrend, CAD NOK could do very well. So looking at dollar NOK, it's not a surprise here that we are turning down again after moving close to this trend line of resistance that was broken earlier this not this month but back in March. So looking at the closer time frame here, notice that we have a very nice potential 5 waves down, and then you can see a sideways price action. More importantly, that was a 3-wave move to a new low, and normally when that's the case, it usually suggests that this can be part of a complex correction if after that 3-wave structure you see a reversal. So I'm looking for a flat correction, and in flats you will typically see that wave C will retrace back to the area of wave A here, termination point, which was around 10.58. So it was a perfect resistance for where we can see a very nice sell-off, and looks like that so far this is sell-off, possibly an impulse. So watch out for more weakness here, especially if crude oil will somehow stay sideways here or even supportive on the bullish side. Then I think the dollar NOK could even revisit this one pretty fast. But looking at the just from a pure Elliott wave perspective, we have a pretty nice wave structure that suggests further weakness here on dollar NOK. Traders, thank you very much for your attention. I hope that you enjoyed this video. Talk to you soon. Bye.